Good morning.
Good morning. The financial services industry is growing at a rapid pace in the MENA region. The Dubai International Financial Center, or DIFC, is at the forefront of this change. Ranked among the top 10 onshore financial centers worldwide, the DIFC is arguably the place to be for financial service companies looking at targeting not just the UAE, but the whole MENA region. Setting up a representative office in DIFC is one of the ways of testing the waters before deciding on taking on a full-fledged license.
And so our topic today, ladies and gentlemen, is all about DIFC Representative Offices.
So, what is a DIFC representative office?
The DIFC offers a low-cost alternative for firms that wish to explore the market. It allows for the marketing of one or more financial services or financial products which are offered in a jurisdiction other than the DIFC. These products are usually of a head office that is based in a different jurisdiction.
What are the advantages of setting up a DIFC representative office?
Obtaining authorizations to conduct financial activities from the DIFC involves a detailed and structured process. It usually takes anywhere between 4 to 6 months to obtain a license, and an investment of substantial capital, leasing of suitable office space, and other costs such as licensing and legal structuring at the DIFC Registrar of Companies. In short, one has to be sure of the feasibility of such an office, since it involves the investment of considerable monies and time. Some firms, especially those that are exploring the UAE as a new jurisdiction, or are unsure of the potential of their products in the market, may prefer setting up a representative office in the DIFC to begin with. The authorization process, although processed by the DFSA, is relatively simplified, keeping in mind the lower risks associated with operating such a setup. Costs for licensing are significantly lower as well. Representative office setups may also be preferred in cases where firms just want to promote or market their products, and not engage in client-facing activities.
A common question that we come across is this: my firm is regulated by a self-regulatory organization, SRO, and not by a financial services regulator in its home state. Can I apply to be a representative office?
Well, the short answer is yes. Having said that, do note that the parent company will have to demonstrate equivalence in regulation and supervision, possibly through an equivalence report.
Another question frequently encountered is this: my firm is based in another emirate in the UAE and regulated by another UAE-based regulator. Can I open a representative office in the DIFC?
Unfortunately, no. The rep office structure is meant to be for firms that are not present in the UAE, and hence wish to establish a presence in the country.
So, what activities can be performed by a DIFC representative office?
The representative office in the DIFC cannot engage in client-facing activities. It cannot onboard clients, nor carry out any services other than marketing and promotion of the products or services of its parent. Marketing activities involve the following: providing information on the financial products or financial services of its parent company and engaging in related promotions, and making introductions or referrals in connection with the offer of financial services or financial products. Please remember that a representative office cannot represent anyone other than itself, its parent firm, or a member of its group.
What does the DFSA consider financial services and financial products?
A financial service includes any activity that is considered a financial service in the DIFC and in the jurisdiction where the service is provided by the parent company or group company. A financial product is limited to what would be considered an investment, a credit facility, a deposit, a profit-sharing investment account, or a contract of insurance under the existing DFSA rules. Points to keep in mind: DIFC representative offices. 1. Cannot market the financial products or services of a firm that is not part of its group. 2. Cannot provide advice in regards to investments, credit, or insurance. 3. Cannot have clients. 4. Cannot assist in completion of application forms for account opening or financial products. This would constitute arranging deals, arranging credit or insurance intermediation, all of which are regulated activities, and 5. Cannot market highly leveraged products. In cases where the head office or group companies promote non-group products or services, a representative office can make general references to third-party products or services that it provides access to through a group company. However, the representative office must refrain from mentioning the names of any third-party providers, and it must not make any references to non-group financial products or financial services in its marketing materials.
I have a question. How do the permitted marketing activities of a representative office differ from providing advice?
Well, Angela, the information that a representative office can give to a potential customer is limited to general information about financial products or financial services offered by a related party. A firm advising on financial products can give advice to an investor or potential investor on the merits of that person, either as principal or agent, buying, selling, holding, subscribing for or underwriting a particular financial product offered by any third party. This is advice, not just giving general information. Advice differs from general information because the latter does not contain any view, based on an assessment of the particular investor's needs and circumstances, of the merits of him buying, selling, subscribing for or underwriting a particular financial product. Instead, general information contains only factual information and promotional literature, such as product features and benefits, about the financial products.
Understood. So Ethan, can the representative office distribute investment research?
Yes, Angela. A representative office wishing to distribute investment research will need to ensure that it does not contain advice on financial products or credit, which includes any recommendation, explicit or implicit, to buy, sell or hold a particular investment. Where research is provided, it must include a clear warning on the face of the research that it is provided for information purposes only, that it should not be relied or acted on by the recipient, and that it is not a recommendation by the representative office for the recipient to buy, sell, or hold a particular investment.
So, can the representative office distribute a fund prospectus?
Well, if a representative office wishes to distribute a fund prospectus from its premises in the DIFC, it should ensure that in doing so it does not provide advice or arrange for the prospective client to buy or sell the relevant units or securities. The prospectus should have a clear disclosure stating that the prospectus is provided for information purposes only, that it should not be relied or acted on by the recipient, and that it is not a recommendation to buy, sell, or hold a particular investment. Additionally, the representative office should also take reasonable steps to ensure that the recipient cannot otherwise assume that the investment prospectus is intended to be acted upon, for example, by removing from any prospectus the associated subscription or application forms.
Can the representative office market funds under its license?
Yes, it can, subject to the funds meeting certain criteria, including requirements for the fund manager and custodia being licensed in a DFSA-recognized jurisdiction. There are also additional requirements to consider when marketing foreign funds in the Greater UAE. We would encourage you to get in touch with us for detailed analysis and clarifications on this particular subject.
A common question again. Can the representative office onboard clients?
No, it cannot. A representative office cannot have clients, even if they are accredited/professional or institutional clients.
But Ethan, can the representative office have ongoing relationships with individuals or institutions to whom its marketing activities are directed?
Generally speaking, marketing activities would not involve continuing relationships. However, in some cases, multiple meetings may be required. While this is permissible, the representative office will have to be cautious to ensure that it does not inadvertently engage in a financial service such as advisory or arranging activities.
Interesting. A client we met with the other day wanted a clarification. He said, "We would like our representative office to help our clients fill out forms and forward these forms to us. Is this permissible?"
Here is my answer. A representative office may not fill in or assist in filling in an application form for financial products, as this would amount to the financial service of arranging credit or deals in investments or insurance intermediation, and the representative office would be acting beyond the scope of its license in doing so. The core business of a representative office is to make referrals or introductions to another person and provide mere information on group companies, services, or products. Also, a representative office is prohibited from receiving and transmitting orders in relation to a financial product. Accordingly, if it does provide a mailing service, it will need to take reasonable steps to ensure that it does not breach this rule.
Sounds like there isn't a lot a rep office can do other than marketing, isn't it?
Yes, and that's what they want to make sure you understand. Can a representative office market Forex and other highly leveraged products of its parent company or group companies?
I'm getting there. So tell me, Ethan, can a representative office market Forex and other highly leveraged products of its parent company or group companies?
Short answer, no. The DFSA refers to such products as restricted speculative investments, or RSIs. It considers these products as highly speculative and has prohibited marketing of RSIs from representative offices.
Are there any mandatory appointments for a DIFC representative office?
Yes. Every representative office in the DIFC has to appoint a principal representative, who acts as the liaison between the parent company and the DFSA. The principal representative has to be resident in the UAE in due course, that is, before final licensing. The DFSA ordinarily conducts an interview with the principal representative designate before making its decision and issuing an in-principle approval.
What are the criteria that the DFSA uses to assess an application for principal representative?
The DFSA takes into account many considerations when assessing the fitness and propriety of a principal representative, including integrity, competence and capability, relevant qualifications, and financial soundness of the individual in question. On the number of staff, the DFSA has not prescribed a maximum number of staff for representative offices. This is because they expect the number of staff in any representative office to reflect, for example, the nature of the business of the head office and that of any group companies. A large, multinational entity with many group companies may possibly need more representatives on the ground than a small single-office entity. However, the DFSA will closely monitor representative offices which employ, on a permanent or temporary basis, a significant number of staff apparently out of keeping with the limited marketing activities it is allowed to conduct.
So, are there any rules for naming a DIFC representative office?
A representative office must be a branch, and so its legal name will be the same as its head office. For example, a representative office of Disha Capital Limited would have to use the trading name, Disha Capital Limited, DIFC Representative Office.
Does a representative office have to appoint a compliance officer or a money laundering reporting officer?
Actually, the principal representative is responsible for the day-to-day operation of the representative office, including its compliance and anti-money laundering, or AML obligations. In practice, however, we have seen a representative office's head office, or appropriate group office, assisting the representative office in complying with its AML obligations. Alternatively, this support service can also be outsourced to a competent service provider, such as 10 Leaves.
Interesting. But can staff from the head office or group offices undertake marketing visits to the DIFC?
Yes, as long as visits by relevant head office or group overseas staff to the representative office are temporary, occasional, and limited to the activities the representative office is permitted to carry out under its license. The representative office should ensure that the visiting overseas staff are fully aware of the relevant rules applying to the representative office when undertaking marketing visits to the DIFC. This is to prevent any breach of those rules or the financial services prohibition. The fact that the overseas staff may be authorized to carry out certain activities at the head office or other group company does not mean they are authorized to perform those same activities in the DIFC. The scope of permitted activities is limited to what the representative office's license allows. Now, let's understand the reporting requirements. There are 3 main reporting obligations. 1. Annual AML return, completed annually and submitted within 4 months of the representative office's financial year end. 2. Suspicious activity reports, SAR, must be sent to the UAE Central Bank's Anti-Money Laundering Suspicious Cases Unit, AMLSCU, and a copy should be forwarded to the DFSA. This is on an ad hoc basis. 3. Collective investment rules reports. Representative offices engaged in the marketing of foreign funds are required to comply with the CIR rules. A SIR form must be completed if the representative office is marketing foreign funds and returned to the DFSA within 4 months of the representative office's financial year end. Do get in touch with us should you require assistance in this regard.
Now, let's have some information on the application process.
The DIFC application process commences with formal introductions to the DIFC and the DFSA. This is done through a letter of intent that is submitted to the DIFC, and a pre-application form that is submitted on the DFSA website. Once done, the DFSA arranges for a preliminary call to make introductions and invite the applicant to submit the detailed online application for representative office authorizations. The KYC of the group and associated forms of all key individuals are also part of this submission. The formal application is then sent across to the DFSA, who reviews the pack over a period of 7 to 10 business days, and then accepts it. The detailed review process then commences, and this can take anywhere between 4 and 6 weeks to complete. The regulator maintains communication with the applicant at all times during the review, reverting with an initial review 2 weeks into the application, and then follow-up reviews thereafter. The DFSA also meets with the principal representative designate, and conducts a detailed interview to assess fitness and propriety. An in-principle approval is issued in case the application is successful. The applicant then proceeds to satisfy the in-principle conditions, and this involves leasing office space, establishing the branch and processing the visa of the principal representative. Once done, a final submission is made to the DFSA, following which the regulator issues the financial service permissions and the process is then complete. The representative office is now authorized and can conduct marketing activities from the center. The rep office is expected to have a place of business at the DIFC. The DIFC has recently permitted representative offices to lease desk spaces starting from $2,000 per month with a 4-visa option, which is excellent value for the price. Of course, the representative office can choose to lease bigger spaces, as long as they are within the DIFC. The rep office may also be permitted to share space with a group company that is already established as an authorized firm, under certain circumstances. However, it will not be allowed to share spaces with any other firm.
And how much does all this cost?
The DFSA is responsible for reviewing and approving all applications for financial services. Generally, there are two components of DFSA fees. One, an application processing fee, and the other, an annual licensing fee. The DFSA charges a one-time application fee of $4,000 and an annual license fee of $4,000. The ROC helps to establish the legal structure of the representative office. This would be a branch license, and costs for setting up include a one-time application fee of $2,000 and an annual license fee of $4,000. As mentioned earlier, a dedicated desk space comes in at $2,000 a month, and leased offices start at $35,000 per annum. An establishment card is required in order to process visas. It costs around $630 to apply and maintain on an annual basis. There is a security deposit of around $700 per visa, and a visa processing fee of around $1,500 for a 2-year visa.
I guess that was pretty comprehensive.
The easiest way to navigate this process and establish in the DIFC is to get in touch with us. We provide turnkey services for DIFC representative offices. From initial consultations, to assistance in authorizations, to assistance in preparation of the legal documentation, 10 Leaves helps you navigate the DFSA rulebook and submit an application that is comprehensive, complete and compliant. Our services include assistance in reviewing the business model and advice on the applicable regulatory framework, preparation of the detailed application and financial projections, preparation of all policies, processes, and manuals required, provision of outsourced compliance and AML support services, finalizing the legal structure, including holding establishment of the branch company, and finalization of leased space and obtaining financial services permissions. We also assist with corporate and commercial documentation through our legal consultancy, 10 Leaves Legability. We assist in the drafting of employment agreements, investor agreements, and distributor agreements. We also provide services in Luxembourg, Saudi Arabia, and Mauritius. Well, this brings us to a close of today's podcast. We hope that it was informative, and we look forward to hearing from you should you have any questions on getting set up in the DIFC. Have a great day and week ahead.
Thank you everyone for listening in. Have a great day.